What's going on, guys? Thanks for joining my channel, Robinhood. This is Bob. Today is August 10th. Today we are going to be talking about Simon Property Group. We do have a lot of things to go over. As you guys know, that they did post their earnings after hours today. So let's get started. So today they were up 5.27%. After hours, they actually took a little dip at negative 1.02%. For the week, they're currently sitting at positive 5.88%, and for the month, they are up 3.4%. So they did post their earnings here today after hours. So let's go over the actual numbers for you. So the earnings, quarter 2 2020, their expected was 0.94. They actually reported 0.83, which was negative 11.29%. The revenue expected was 1.13 billion. They reported 1.06 billion with negative 5.74%. So breaking that down in dollars, it was 254.2 million or 83 cents a share. Last year they were at 495.3 million or $0.6 per share. So basically that's a 48% loss from last year's numbers, quarter 2. A couple things that they did put out: percentage of collected rent in April and May. They only collected 51%, but in June they did have a pretty good jump at 69%. So if we do take that average of the second quarter of April, May, and June, basically you add them together, divided by the 3 months, so the average percentage would be 57%. So the good news is they did say in July they did bump it up to 73%, which is a pretty significant difference of 16% from the average they had last quarter. So far this is a pretty good start to the numbers. So let's just go over the conference call that happened at 5 o'clock. So basically they were just talking about they are acquiring inventory at a below or at or below cost. So they're basically just trying to buy properties and making bids for properties, just trying to get good deals for them while they can, because they do have a lot of cash on hand. So SPG is looking to salvage additional distressed realtor, having bid for bankrupted Lucky Brand, Brooks Brothers, and also JCPenney. So just saying with Brooks Brothers, they said that they saved them from liquidation. They would actually save about 4,000 jobs. So not only would it help them, it would help a lot of people not losing their jobs. Also, they did talk about revenue that they are hoping to collect. So they do have a couple lawsuits out. The highest one would be Gap. I believe this number is even higher now because I believe they still missed a couple of more like last month rent. So right now they said it was $65.9 million that they're still owed through Gap. So if they do win that lawsuit, this is basically pure income, pure profit. And also some more good news: 91% of tenants are open for business now, and they do expect the rest of them to be opening sooner than later. So big news that happened yesterday: Amazon is in discussion with Simon Property Group about using some of the JCPenney stores that closed and Sears stores that closed for Amazon to use it for fulfillment centers. So if you're not familiar, Amazon fulfillment centers are charged with customer orders. In other words, Amazon warehouse not only store products, but they also serve as distribution centers where associates pick, pack, and ship orders quickly and efficiently. So currently there are about 161 plus fulfillment centers. So I did look them up. They are basically just about everywhere: Arizona, California, Colorado, Connecticut, Delaware, Florida, Georgia, Illinois, Indiana, Kansas, Kentucky, Maryland, Massachusetts, Michigan, Minnesota, Nevada, New Hampshire, New York, North Carolina, Ohio, Pennsylvania, South Carolina, Tennessee, Texas, Virginia, Washington, Wisconsin. I think the main area they were looking at was in the Florida area though. but I counted over about 161 fulfillment centers. But JCPenney has currently closed 61 stores. Sears has closed about 11 stores. Realistically, they're not going to pick up 72 stores. I think they would pick up maybe 10 to 20 stores, if that, if they can get a good deal. But if they did do that, it would kind of be a win-win, because Amazon needs to expand. Malls are not a bad choice, especially with the Sears, because they have a kind of an indoor-outdoor access for their shipment. So at least 11 stores would be pretty prime picking for them. Some of the JCPenney stores might have good access as well. So there's a couple of good things that are coming in the works. So I feel that if we can stick to 73% to 85% on the next quarter, basically that would be pure profit. So if we're hitting at average of 57% and still bringing home a profit, if we can get an average of 75 to 80%, that would be a whole bunch more, and I think we would get into the $80–90 range of the sale price for SPG. So hopefully by the third, possibly fourth quarter, we can get back to the $80–90 range. Hopefully within the 12-month period, we can still get back up to the 100+ range, as long as there's not another pandemic that closes down the malls or the stores that they own again. So thank you guys for watching this video. Any questions, any comments, and also let me know if you guys have this company, and let me know how you're doing, kind of what your buy price is as well. So make sure you guys subscribe, comment below, and hit the like. Thank you guys. Have a good day.